Hello and welcome back. And if this is your first time here, I am Dr. Stock, Doctor of Education. And this is a vacation edition that I have. I have the Tesla earnings stock price prediction for you, Tesla earnings prediction and the Tesla stock price prediction up through 2030 in this video. And I'm going to ask that you forgive me for this vacation. I don't have my normal studio set up with my normal computer, so I'll be reading off some of these figures. If you do want access to this, by the way, it is available over at the Patreon. That link is found down in the description. Also, there is a link down in the description for Moomoo if you want to not only support yourself by getting some free stocks, but also support this channel. You can find that there as well. Enough with the plugs. Let's move on to the Tesla stock price prediction and the Tesla stock price earnings prediction that I have as well. So the production numbers, as we know, for Q2 came out to almost 480,000. We fell 300 vehicles shy of that number. The deliveries 466,140, and that also includes almost 80% increase quarter over quarter, with the models S and X, and the models 3 and Y have been up 8.4%. So that actually puts us in a really good position for hitting that annual target, which is good. So as long as Tesla keeps on showing us those growth metrics, that's going to be very strong moving forward for earnings. So that's something we want to pay attention to. I have their Q2 revenue coming in about 8% higher quarter over quarter, $25 billion, over $25 billion. Actually, I have 25.167 billion according to my projection. The automotive revenue, which we care about greatly right now because that's the predominant part of it, still coming in at about 21.4 billion based off what I can see on my laptop screen here. And that means the auto gross profit coming in at about 4.3 billion, just shy of it, putting us at about 19.9% auto gross margin. That'd be nice to see that bump back up to 20. More importantly, that the total gross profit I have at $4.5 billion, and then total gross margin shrinking from 19.3% in Q1 and down to 18%. And that's because of the aggressive cuts that we have. Now, the cuts that we have do cut into the margin. I should say the price cuts that Elon's been doing do cut into the margin for the vehicles. So it's not quite what it once was. However, I believe that this is a short-term strategy to handle a long-term problem, which is market penetration. So by staying on top of the EV market, by making sure that they have continued brand recognition and more access to their vehicles all the time, I really think that those demand drivers are going to pay off in dividends for them and for the investors for Tesla as well. So that's how I believe it goes, and I'm not sweating the 18%. That's still better than any of the legacy autos that we have. For the total gross margin, it does kind of take away from some of those other stock price predictions that may have been out there with that shrinking margin. And that's one of the reasons why you saw some of the sell-off that you did over the past year or so that we started. There was the semiconductor shortage, and then also the rising interest rates and the fear of recession. And then there was also the demand question for Tesla. Is there a demand problem with so many undelivered vehicles? And really, a lot of that, I think, was infrastructure. Even if it wasn't on Tesla's part of it, just getting the deliveries out, I think, was a problem for that. And that has actually very much so been largely addressed with this quarter. We only had 13.56 thousand, so between 13 and 14,000 vehicles that were left undelivered. And while that's not great, you're not going to deliver them all. I still think that percentage-wise, that's much better than it has been. So that's really worthwhile putting that out there. So this isn't, if you watch my Q1 Tesla stock price prediction that I had with the earnings prediction for Tesla, I actually had Q1 earnings reported as the GAAP earnings, the generally accepted accounting principles earnings, and they actually headline with non-GAAP. So I switched that up. So it was 85 cents for Q1, and I actually have Q2 still coming in, even though they come in. Let me see how much more revenue they have. So coming in with about 8% more revenue than the previous quarters, the hit that they took to margin, still having them come in at 85 cents per share. So that's actually even with what we have, and that actually matches with Wall Street. And I know that there's going to be skeptics out there like, oh, you're just matching with Wall Street. Well, if you are a skeptic, you can actually you can go and pull the numbers that I have on this spreadsheet that I have access to through the Patreon, that you can see how they're calculated. As a matter of fact, you can even come and talk to me about how I use weighted averages and production forecasts and actual production numbers in order to come up with these predictions in the first place. And all of that is available by the link down in the description. Let's move on from there. So let's go delivery targets, and then we'll talk about stock price prediction. So like I said, 85 cents per share is what I have them coming at for quarter two. That annualizes out to $3.40 per share for the year. And we'll see if this is a year that picks up for us, if it's going to be a year that causes some other challenges. And we'll see. Tesla, I think, is going to stay the leader. I think the challenges would come economically speaking, and we'll see if we see that through student loans. We'll see if we see any more aggressiveness from the Fed. As a matter of fact, we have the next FOMC meeting next week already, which, holy cow, that seems very, very soon to have that happen. But let me move on from there. Something very significant that you may have missed with these delivery numbers is that we actually, if all Tesla needs to do, we don't want to see this, but all they need to do is hold steady over the next 2 quarters for delivery numbers, and they meet their 1.8 million vehicles delivered. So that would be absolutely incredible. Elon was pushing for getting possibly up to 2 million. He said that the stars would have to line to have that happen. And well, right now they're sitting pretty with that. Coming in strong. As a matter of fact, it's a 2.3% drop from quarter two to quarter three in order to meet their delivery target, and then just coming even with quarter three with quarter four's numbers. And now we're getting into the weeds with all that. All right, so stock price predictions. As of yesterday's stock price close of $290.38. Now, mind you, I believe that there's currently a run up to earnings, and I believe that unless we get something incredible, impressive, surprising from earnings, I believe that with the rising wedge that we see and we get a fall in the RSI, it is strongly possible that we actually get a sell-off from earnings, even if they are modestly good or even if they meet expectations. The way that the stock price rises in the near term for Tesla is that we get some sort of incredible, surprising beat, or when we hear the earnings call, we get some wonderful forward-looking guidance. Those are the things that could change my mind, that this would be something that would really take off for us. So these numbers that I have for you, I know that they don't sound too impressive at first, but they are very conservative numbers, and they really only take into account the delivery numbers that we have, that according to the delivery targets that there are. And, I don't think that, like I said, these are conservative, and that's the way that I would rather invest conservatively rather than make that best case, all the stars align scenario, because that nearly never happens. And I know that you could have people coming out saying $5,000 per share for Tesla, and I'm not going to be that hype guy, and so I'd rather be that realist. And if you guys, the choice is always yours. If you're investors already, you're already excited about this. If you see something that is going to be a little bit more aggressively priced for those stock price predictions, so be it. But what I have for the end of 2024, so end of 2023, honestly, we're going to have to see how it goes. I think we end near the $300 mark for Tesla, and that's with whatever we know currently about Tesla, that we end near that $300. If the stock market continues to remain very strong, that could certainly affect it. And really, we get that through the price to earnings ratio, and really that affects the multiple. For example, when I originally made my spreadsheet for quarter one, Tesla was only trading at about a 56 PE, and now they're trading, as of yesterday's close, which today is the July 18th, yesterday was July 17th. So Monday, July 17th, the close is $290.38. And that's a multiple, a PE of 80. What has really changed about Tesla from quarter one to quarter two? It's market sentiment is what it is. And there's been other things that have changed. That the adoption by legacy auto to actually use Tesla's charging network, Tesla, possibly being that infrastructure winner for the charging network and building it out, and that they can do it to scale and they can do it fairly profitably. That speaks volumes for Tesla and their strength, and keeps me an investor in Tesla. All right, let's move on from there. So I think we end right around $300, give or take 10% for the year. And I know that's pretty wide. It's 270 to 330. But when we look at this long term, I think it makes more sense to spread it out over those years. So by the time, I'm going to say end near 300. So by the time we get near the end of 2024, I have them coming in at about $352. So that's 21% up from its current, from its most recent closing price as of the recording of this video. So that's July 17th closing price at $290. So up 20% in a year. So when you look at 21% a year, like if you're really looking for aggressive growth, there's probably a significant amount of alpha there. So gains beyond what the market can give you. By the time we look at 2025, that's 56% up. So 50% in 2 years. Again, the market itself, the S&P, the NASDAQ 100, they're likely not going to return that to you over the next 2 years. And then when we look out 3 years, when we go to the end of, well, 1 year would be 2024, 25, 26. So we've got 3 years, double your money in 3 years. That's half the time that you should be looking to double your money with your investments. So usually you have the 5 to 7 years to double your money. This is happening in 3. So Tesla's, according to what I have, and that's trading, by the way, at a 62 PE with a PEG ratio of 1.6. That's trading at 100%. So that's by 2026 that you double your money. And when we go all that to 2030, like I said, you can look at the full spreadsheet over at the Patreon. I'm only not putting it up right now because I don't have my normal setup in my studio where I have a much better computer and I have my camera set up and I can do the screen sharing and all that kind of stuff. So please forgive me on this. You can go back and rewatch it. Let me know down in the comments what you think. What stock prices do you think they're going to have? What are their earnings going to be like? What percent margin, what gross margin are they going to put out? What net margin are they going to put out? If you have any thoughts on this or just anything you want to share about Tesla or, just some greetings or whatever, put that down in the comments. By 2030, with a PE ratio of 39 and a PEG ratio of just 1. So that means that the growth of this thing is pretty much out. It hasn't really stagnated, but now we're down to about normalized. So I have a decreasing PEG ratio from end of 2024 all the way down to 2030. So mind you, that PEG ratio can most certainly hold out if we get autonomous driving, if they continue to build out their charging networks, if they really get broadly adopted worldwide as the go-to for EV charging. There's just a lot going for Tesla. I think that they have a huge moat going for them already, and that it continues to expand over time, and that they're just an ambitious and performing company, and they give us that growth. 2030, we come out 375% up from yesterday's close. So that's over 4x, almost 5x your money. I have $1,379.34. So about $1,400 stock by 2030. And like I said, some people are more aggressive. They see that happening by 2025. I don't know that I see that happening by 2025. As a matter of fact, 2025, I have them coming in about $453 per share, which still, that 50% up-ish is, in my mind, it's incredible. And as far as growth stocks go, Tesla is probably one of the safest plays that you have out there that's actually been performing and showing that growth quarter after quarter, year after year. And I think that they're going to continue to do so. And that's why I talk about them so passionately. So thank you guys for watching this video. I really appreciate it. There's a link down in the description for Moomoo. You can sign up, get your free stocks. I use it in my typical videos, not this vacation video. You get a wonderful trading app, 5 free stocks for a deposit of $100. Deposit of $1,000 gets you 15 free shares. And then if you deposit $5,000 or more, you get 16 free shares, one of which is either Tesla or Google share. So just check out that link for Moomoo. And if you want access to my Tesla earnings and my other exclusive content available through my Patreon, talk with me over in the private Discord. That link is also down in the description. I really appreciate you watching this. I'm going to go back with my family and check on the new baby. She's 4 weeks old as of yesterday, and tomorrow she'll be a 1 full month old finally, and she's doing incredibly well, and mom's doing incredibly well, and her sisters couldn't love her more, and we couldn't love her more. It's been a great time, and we're very blessed for that. So thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, learning is earning, and we'll see you in the next video.